Why is the UK going bankrupt? A detailed economic study. The notion of the UK facing bankruptcy is a complex and multifaceted issue, reflecting a mix of economic challenges, political decisions, and global uncertainties. In this article, we'll dive deep into the factors contributing to the UK's financial difficulties, analyzing both historical and current economic conditions. Introduction. The UK, historically known for its robust economy and financial stability, has been facing increasing economic pressures in recent years. While the term bankrupt might be hyperbolic, there are significant financial challenges that have raised concerns about the UK's economic future. This analysis aims to unravel the reasons behind these economic troubles. 1. Debt and deficit issues. Public debt. The UK's public debt has soared to unprecedented levels, particularly after significant spending during the COVID-19 pandemic. As of 2024, the UK's national debt stands at over £2.5 trillion, a substantial increase from pre-pandemic levels. This heavy debt burden poses a significant challenge for the government, as a large portion of tax revenues goes towards servicing this debt. Budget deficit. The UK's budget deficit has also been a major concern. Despite efforts to reduce it, the gap between government spending and revenue continues to be substantial. High levels of borrowing and expenditure, coupled with relatively slow economic growth, have exacerbated the deficit issue. 2. Economic slowdown. Brexit impact. Brexit has had a profound impact on the UK economy. The transition out of the EU has led to disruptions in trade, increased costs for businesses, and uncertainty in the market. The end of free trade with the EU has particularly affected sectors such as manufacturing and agriculture, leading to reduced economic growth. Low productivity growth. Productivity growth in the UK has been sluggish for several years. Low productivity affects the overall economic output and hampers wage growth. The lack of productivity improvements limits the potential for economic expansion and affects the nation's competitiveness. 3. Inflation and cost of living. Rising inflation. The UK has faced significant inflationary pressures, driven by a combination of global supply chain issues, increased energy prices, and domestic economic factors. High inflation erodes purchasing power, affects consumer spending, and increases the cost of living for households. Cost of living crisis. The cost of living crisis has hit many UK households hard. Rising prices for essential goods and services, coupled with stagnant wages, have strained household budgets. This crisis has led to increased financial pressure on lower and middle-income families. 4. Political instability. Government policies. Political decisions and government policies play a crucial role in economic stability. Recent years have seen political instability and frequent changes in leadership, which have contributed to economic uncertainty. The effectiveness of fiscal and monetary policies has been debated, with some critics arguing that the government's approach has been inadequate in addressing the economic challenges. Trade and foreign relations. The UK's trade relationships and foreign policy have also faced challenges. Trade negotiations and agreements post-Brexit have been complex and sometimes contentious, affecting international trade and investment. 5. Global economic environment. Global recession risks. The global economic environment affects the UK's economic health. Risks of a global recession, trade tensions, and geopolitical conflicts can have a ripple effect on the UK economy. Economic slowdowns in major trading partners or global financial markets can impact the UK's economic performance. Energy prices and supply chains. The volatility in global energy prices and disruptions in supply chains have also impacted the UK economy. As an energy importing nation, the UK is vulnerable to fluctuations in energy prices, which affect both households and businesses. 6. Future prospects and solutions. Economic reforms. Addressing the UK's economic challenges will require significant reforms. Strategies to improve productivity, manage public debt, and stimulate economic growth will be crucial. Investment in infrastructure, education, and technology could play a role in revitalizing the economy. Policy adjustments. Policy adjustments, including fiscal policies to manage debt and monetary policies to control inflation, will be necessary. Ensuring political stability and effective governance is also critical for economic confidence and recovery. Global cooperation. Engaging in global economic cooperation and securing beneficial trade agreements can help mitigate some of the negative impacts of global economic conditions. Strengthening international partnerships can also provide support for economic growth. Conclusion. The idea of the UK going bankrupt is an oversimplification of a complex economic situation. While the UK faces significant financial challenges, including high debt levels, economic slowdown, and political instability, these issues are not insurmountable. With strategic reforms and effective policies, there is potential for economic recovery and stability.